Okay, so let's start with the next SEBI regulation, that is the SEBI SAST regulations 2011. Ma'am, what is the full form of SAST regulation? So it is substantial acquisition of shares and takeovers. Okay, substantial acquisition of shares and takeovers regulations 2011. Now in this case, the concept is very simple. Okay, just that there will be few procedures, there will be few obligations, there will be few disclosures. That is going to be a little theoretical. Okay, so let's do one by one. Let's first understand the concept of this SEBI SAST regulations. You can also call it, people used to call it as takeover codes also earlier. Okay, we are just taking the actual name, that is substantial acquisition of shares and takeovers regulations 2011. Okay, now what is going to happen? Who is required to follow these regulations? Let's try to understand that. Now let's say if I am a person who wishes to acquire some shares. Okay, I am a person who wishes to acquire some shares, or I am a person who wishes to acquire some voting rights of the other company. Then in that case, SAST regulations will be applicable to me. Okay, so the person who wants to purchase it, that person will be called as what? That person will be called as the acquirer. Okay, that person will be called as an acquirer. I want to acquire what? I want to acquire some shares, or I want to acquire some voting rights. Okay, of which company? Of some other company. That some other company will be called as a target company, and if that company is a listed company, then only these regulations will be applicable. So acquirer wants to acquire some shares and voting rights in the target company. Then in that case, SAST regulations will be applicable. Either I want to acquire some shares or voting rights, or I want to acquire some control. Okay, some control in that target company, then these regulations will be applicable. Ma'am, what do you mean by control here? So control here means I have got the right. I have got the right to take some policy decisions in the company. I have the right to appoint majority directors in the company, or I have got the right to control the management of the company. Okay, means I have got some important control over that target company. Even that is considered as acquisition. Okay, acquisition not of shares, but acquisition of control in that target company, listed target company. Then in such case, SAST regulations will be applicable. Okay, who is acquiring it? Who is acquiring it? Acquirer. Okay, acquirer, any particular person is acquiring it along with, okay, along with either individually or along with a person acting in concert. Okay, along with person acting in concert. Person acting in concert, PAC. What do you mean by this? Person acting in concert is nothing but any other person who is cooperating with the acquirer. Let's say I am the acquirer and you are cooperating with me in acquiring the shares, control of that target company. Okay, now next question, ma'am. Why is that PAC cooperating with you? That can be because of an agreement. Okay, because we have signed an agreement formally, informally between us that you are going to help me in acquisition of shares of that target company. I am acquiring along with the person acting in concert, because even that person acting in concert wants to acquire some shares in the target company, and we are jointly doing the same. Okay, so I hope the diagram is clear in your mind. Who is the acquirer? Acquirer along with the PAC, person acting in concert, person acting in cooperation. Acquirer or the PAC is acquiring some shares or voting rights or control in which company? In the listed target company. If this condition is fulfilled, then we know. If this condition is fulfilled, then we know that SEBI SAST regulations will be applicable. I hope I am very, very clear with this. Yes. Okay. And then after that, going on to the main two regulations of the chapter, regulation number 3 and regulation number 4. Okay. In your textbook also, just do the small correction. Instead of section number 3, please make it regulation number 3. That was a typo error. Okay, regulation number 3. Now I am taking both the regulations together, regulation number 3 as well as regulation number 4. Both of them I am taking it together. Can you see in the heading I have written as regulation number 3, and below when I am writing the content I have also given the reference of regulation number 4, because both of them can be done together, there is no problem in that. Can we start? Okay, now what is the procedure if an acquirer along with PSC wants to acquire some voting rights, or it wants to do some substantial acquisition or control in the target company? Then what is the procedure for the same? So we have got an overview. We don't have detailed procedure, but we have got an overview for the purpose of our SPOM paper. So now they are telling that if acquirer or PSC is as of now holding less than 25%, in whom? In the target company. Okay, as of now I am holding how much? As of now I am holding less than 25%. It can be 0, it can be 1%, it can be 2%, it can be 20%. Okay, means I am as of now holding less than 25%, but now I want to do some acquisition, and because of that acquisition my percentage is going to be more than or equal to 25%. Okay, my percentage, my control or my holding in that target company is going to be more than or equal to 25%, means you are doing a substantial acquisition. Okay, means you are doing a substantial acquisition. So before doing the substantial acquisition, you will have to do an open offer to the public. Okay, you will have to do an open offer to the shareholders, existing shareholders of the target company, because you have to inform them that you are going to be a big shareholder in this particular company. So you have to inform them by way of an open offer that I am going to enter the company now. If you want, you can sell your shares to me. So we are purchasing the existing shareholders' shares. Okay, and for that you will have to do a public announcement. Okay, you will have to do a public announcement of an open offer that as of now my holding is less than 25%, but because of my new acquisition my holding is going to be more than or equal to 25%. That is, my holding is now going to be a substantial acquisition. Are you clear with this? Okay. So ma'am, what part is covered in regulation 3 and what part is covered in regulation 4? Okay, so if as of now my holding is less than 25% and it is going to be more than or equal to 25%, then public announcement of an offer is must. This first part, this first circumstance is covered in regulation number 3, where they say that public announcement is required. Okay, and it is must, it is compulsory. That is given in regulation number 4. That's why we are doing both of it together. Okay, it is compulsory. In regulation number 3, they have just told that, open offer will be required. Okay, or public announcement of an open offer is required. Now, required what? Voluntarily or mandatorily? Okay, it is mandatorily required. That is as per regulation number 4. Yes. Okay, similarly, one more circumstance. Check what is the next circumstance. If acquirer and PSC, okay, either individually or together, if they are holding more than or equal to 25%. Okay, already if they are holding more than or equal to 25% means they are a substantial holder of shares, and now they want to further acquire. Okay, now they want to further acquire more than 5%. Not more than or equal to, not equal to 5%. If they want to acquire more than 5%, they are already holding more than or equal to 25%. Now they want to acquire more than 5%. Then also they will have to inform it to the public. They will have to inform it to the shareholders, and they will have to give a public announcement of an open offer, and that is must. Okay, that is compulsory. Compulsory word is given in regulation number 4. Did you understand the difference between the first one and the second one? In the first one, you were small, holding less than 25%, but now you're going to become big, more than or equal to 25%. In the second one, you were already big, holding more than or equal to 25%. Now you're acquiring further more than 5%. Okay, maybe 6%, 7%, 8%, 9%, so on and so forth. Then also public announcement is must. Okay, and last case, residual case. Okay, if you are holding more than or equal to 25%, already big, and now you want to do further acquisition but of less than or equal to 5%. A more than 5% we just now did. Now you want to do acquisition of 1%, 2%, 3%, 4%, 5%, something like this. Then in that case, public announcement of an open offer can be given, but that is not mandatory, that is voluntary. So when will it become mandatory and when will it become voluntary? See, Ignore the first case. Okay, check the second and the third case. In the second case, second and third, both you were big, holding more than or equal to 25%. But when further acquisition is going to be of more than 5% big, then it is must. Further acquisition of less than or equal to 5%, okay, public announcement is voluntary. Are you clear with this? Yes, basically you have to give an opportunity. Okay, basically you have to give an opportunity to the existing shareholders and you have to inform them that a new person is going to enter the company. Now it is up to you. Do you want to stay in the company or do you want to exit the company? If you wish to exit the company, you can sell the shares to us. Are you clear with this? Yes? Okay. Then they are telling, see, everywhere the word used was acquirer plus PAC, acquirer plus PAC. What if individual shareholding exceeds 25%? Then also the same provisions will be applicable, either individually or together. Okay, then offer is must. Are you clear with this? Okay, then two very different points. This entire regulation number 3 and regulation number 4 is not applicable if we are doing the acquisition as per ICDR regulations. Okay, your issue of capital and disclosure requirement. If we are doing as per SEBI ICDR regulation, SEBI ICDR regulations will take care of it. Then you need not follow regulation number 3 and 4 of the SAST regulations. And last one that they are telling that, suppose if you are such a target company or if you are acquiring the shares of such a target company whose shares are listed on Innovators Growth Platform. Okay, IGP, Innovators Growth Platform. Innovators Growth Platform is nothing but a platform which was started by the SEBI in the year 2019 for startup companies. Okay. So if your shares are listed there, then instead of wherever we studied 25%, instead of 25%, the percentage will be 49%. Okay, if at all you are such a target company whose shares are listed on IGP, then wherever we studied 25%, everywhere replace it with 49%. Are you clear with this? Yes. So basically, when is public announcement of an open offer must? Okay, when is it must? First of all, it is must when your holding is going to be more than or equal to 25%. Okay, as of now it was less than 25%, now it is going to be more than or equal to 25%. Second case, it is already more than or equal to 25%, now you are going to do a further acquisition of more than 5%. Then in these two cases it is must. Okay, if it is already more than or equal to 25%, but if you want to do further acquisition of less than or equal to 5%, then it is not must, then it is voluntary. If you want to do. If you don't do, then also it is okay. Are you clear with this? Yes. So basically, whenever we are giving this open offer, okay, whenever we are giving this open offer to the shareholders, then in that case, we are giving them an offer period. Okay, we are giving them an offer period. We are telling that you have got so many days available with you, and within this time, you can decide whether you want to sell your shares to this new person or you don't want to sell your shares to the new person. I hope I am very clear till here, everyone. Yes, these were your two most important regulations of the chapter. After this, whatever is going to come is going to be procedure. Okay, it is going to be theory, it is going to be procedural. Only two things are left now. One is what are the obligations, and second thing, what are the disclosures that are required to be done. First, let's do the obligations. There are going to be obligations of 4 people. Okay, who are the 4 people? Can you see 2 points I have written on this page? First, what are the obligations of directors of the target company? Target company is the company in which we are going to acquire. So what is the obligation of those directors? What they are supposed to do? Next, what is the obligation of the acquirer who is acquiring the shares? Then what is the obligation of the target company, and what is the obligation of manager who is the manager to an open offer? Who is the person who is managing? What are his obligations? Let's take one by one. Okay, first about the directors of the target company. Okay, first of all, acquirer. Okay, acquirer, who is going to acquire? Acquirer or the person in charge. Okay, that person or any person representing me, let's say I am the acquirer, I cannot be appointed as a director. Okay, I cannot be appointed as a director on the board of directors of that target company. Logical na. I am in the process of acquiring the shares. At that time, I cannot be what? I cannot be the director. Okay, I cannot be the director, person acting in concert cannot be the director, or any person representing us cannot be a director. Otherwise, independence is affected. Okay, subject to few exceptions. Similarly, when the offer period is going on, okay, when the entire offer period is going on, at that time, no new director should be appointed in the company. During the offer period, no new director should be appointed in the company. But if, let's say, there was a death of any director that has happened, then it can be done if shareholders give their approval. Okay, any other person can be appointed as a director, not acquirer or PAC. Any other person can be appointed as a director in place of that deceased director if shareholders give their approval, right? And suppose if acquirer or PAC was already a director in the company, or if any person representing me was already a director in the company, then that representative should not participate in any meetings relating to this offer. Basically, any person who is interested, okay, any person who is interested in the acquirer and is also a director in the company, then he cannot participate in the meetings relating to offer. Okay, all these provisions are given just to ensure what? Just to ensure independence, just to ensure that offer and directors should not be mixed together. Are you clear with this? Yes. Okay. Then after that, going to the next part, that is the second obligation. Second obligation comes on whom? Second obligation is of the acquirer. Okay, of the acquirer. Very, very simple. Now see, can we say he's going to acquire some shares in the target company? So can we say he's going to get the shares? If he's going to get the shares, he will have to spend money. He will have to pay money to the existing shareholders, etc. So make sure that you have done all the financial arrangements. Okay, later when the public accepts your offer, then you cannot say, no, I don't have money. So first make sure that you do firm financial arrangements. Okay, another thing, whenever these people give an offer, okay, whenever they do the public announcement, after that they are required to issue a detailed public statement. Okay, they are required to issue a detailed public statement in which they will write all the material facts about their acquisition, why do they want to acquire, and so on and so forth. So if in that DPS, if in that detailed public statement, if they have not declared their intention, if they have not mentioned their intention to sell off, to alienate the material assets of the company in ordinary course of business. Okay, if in the DPS, see, they will have to write in the DPS, why do they want to acquire the shares of the company? Why do they want to enter the management of the company? Why do they want to enter the ownership of the company? Just because they want some control, right? So if in that one point is missing, that they did not write about selling the material assets of the company, then after the offer is over, they cannot sell. Suppose if they come into the ownership of the company, now they cannot sell the assets of the company for a period of 2 years. Why? Because they forgot to mention where? Because they forgot to mention in the detailed public statement. So if your intention is to sell some material assets of the company in ordinary course of business, please make sure that you are mentioning that in the DPS. Anyway, later if they want to do, they can do after taking the shareholders approval by passing a special resolution. Okay, only with shareholders approval it can be done. It cannot be done just because they are the new owners of the company. And this restriction will be there on them for a period of 2 years after the end of the offer. So first point was they should make proper financial arrangement. Second one, if you want to alienate the material assets of the company, please mention it in the DPS. If you do not mention it in the DPS, you cannot do it for a period of next 2 years. Right? Similarly, whatever you are writing in the public announcement, whatever you are writing in the DPS, whatever you are writing in the letter of offer that you are going to give, everything, please make sure that everything written there is true, fair and adequate. Okay, because people should not get misled because of your offer letter, public announcement, etc. And if acquirer or PAC is already holding some shares, okay, they are already holding, please do not sell those existing holding during the offer period. For what purpose are you giving the offer? For acquiring. So please don't sell your existing shares. You want to acquire more and more control, na? So don't sell it. Don't sell your old holdings during the offer period. And if you do not fulfill these obligations, acquirer as well as PAC will be jointly and severally liable, because here Even if they have written that this is the obligation of the acquirer, but can we say this is the obligation of the acquirer as well as the PSC? Are you clear with this? Manageable till here? Yes, simple obligations. Then going on to the next one, that is the target company, big obligations. Okay, simple but big obligations of the target company. Target company was that listed company in whom we were trying to acquire some shares, voting rights or control, right? Now, target company will make sure that during this offer period, okay, during this offer period, the business is ordinarily carried on. Okay, it is not like IBC moratorium that everything will stop. No. Okay, important things will stop, but business will be continued in ordinary course of business. Okay, then board of directors should not alienate, sell material assets of the company. It should not do any material borrowings other than in ordinary course. Whatever you are doing in ordinary course of business, that is okay. Please don't do anything which is other than in ordinary course of business. It should not do new allotment of shares during ordinary course of business, etc. But if it wants to do any of this, it can still do if shareholders pass a special resolution. Right? Buyback during this period is not allowed. Entering into or terminating any important contracts is not allowed. So basically what are they trying to tell us here is, please don't do any special transaction. Please don't do any extraordinary transaction during this offer period. Let the offer period get over. Let these people acquire the new shares of the company, and then whatever you want to do, you can do. Okay, similarly, please do not fix any record date for any important transactions. Like record date is fixed for dividends, record date is fixed for issue of bonus shares, issue of right shares. Please don't fix it during the tendering period. Okay, tendering period is actually a 10-day period during this offer period only, where the existing shareholders give their shares to the new shareholder. Okay, when they are allowed, when they are required to offer their shares for sale. So please do not fix any record date during 3 days before the start of tendering period till the end of the tendering period. Tendering period is generally a 10-day period. So during this 10-day and plus 3 days prior to start of this tendering period, please do not fix any record date. Please fix it at a later date. Okay. Similarly, if there are certain shares whose transfer is pending, okay, maybe there were some shareholders, shares dealing, this is a listed company. So can we say purchase and sale of shares is going on recognized stock exchange? So during this period, if there are any share transfer registration which is pending, so company will have to give all the details to the acquirer or the PAC that these many shareholders share transfer is still pending. Okay, then after that, once the acquirer submits that detailed public statement, remember detailed public statement, okay, where it will be writing its intention and all those things, then immediately after that, board of directors of this target company will form a committee of independent directors, and their work will be to give their recommendations about the open offer, and then the company will publish the same for the general public. So basically the independent directors of the company is also giving their recommendation. Should you accept this open offer or should you not accept this open offer, etc. And this should be given at least 2 working days before the tendering period starts. Okay, before the tendering period, in the same newspaper where you had done the public announcement. First, public announcement was must as per regulation 3 and 4. Then detailed public statement was given, and then recommendation of independent directors will also be published in the same newspaper, and plus we will send this recommendation to the SEBI, to the stock exchange, to the manager, etc. Yes, this is whose responsibility. All these things are responsibility of the target company. And once all these things are fulfilled, once your offer period gets over, then transfer of shares should be done. Whoever has accepted the open offer, they will sell the shares to the acquirer, and acquirer will pay them the cash. Are you clear with this? So basically in obligation of target company, important things should not be done. Okay, means extraordinary things, special transactions should not be done during the offer period, right? Don't fix a record date during the tendering period and 3 days prior to the tendering period. Please don't do that. Once the company has received the DPS, detailed public statement, please form a committee of independent director who's going to give a recommendation on the open offer. Manageable? Yes. And then after that, last obligation is of the manager to the open offer. Whoever is managing this open offer, first he will have to ensure, okay, he will have to ensure that the acquirer, okay, manager to the offer will ensure that I will be able to implement the offer and funds arrangement is done. Okay, please don't do a dhoka. Okay, please don't do a fraud with the open offer, right? Next, he will also make sure that DPS, public announcement, offer letter is true, fair and adequate. That was my obligation also, and that is the obligation of my manager also. Okay, next, the manager will furnish to the SEBI a due diligence certificate that he has checked everything properly. Okay, he will have to go and submit it to the SEBI. Then, can we say whenever there is going to be transfer of shares or acquisition of shares happening, we will need help of multiple market intermediaries. We will need help of depositories, CDSL, NSDL, merchant bankers, etc. So, whoever is helping me should be registered with SEBI. Okay, whoever is helping me should be registered with SEBI. Then this will be taken care of by the manager. Similarly, manager will have to exercise diligence, care and professional judgment while doing this particular offer. He will not deal on his own account. Okay, he is not interested personally. He is helping whom? He is helping or he is managing the offer by allowing the acquirer or the PAC to acquire the shares in target company. So he himself should not be acquiring any shares, right? And finally, he will file, once the offer requirement etc. is completed, he will file a report with the SEBI that, sir, all the requirements are fulfilled. Okay, this he will have to file it with the SEBI within 15 days from the end of the tendering period. He will have to go and basically a closure kind of a report that, sir, tendering period is also over, all the offer requirements were also met and everything has been done properly. He will have to go and report to whom? He will have to go and report it to the SEBI. Are you clear with this? Yes. Okay. So these were the four obligations. First, obligation of the directors of the target company, obligations of the acquirer, obligations of the target company and obligations of the manager to the issue. Yes, simple till here, everyone. Procedurals, fully procedural, right? And the last part of the chapter, that is disclosures. Okay, disclosures of shareholding and control. Now see, there are two types of disclosure here. Now let's say whenever there is any acquirer, okay, whenever there is any acquirer along with the PAC, if they are holding more than or equal to 5%, okay, not 25%. If 25%, then that open offer and public announcement is mandatory. Now, if they are holding only more than or equal to 5%, then disclose. Means you are already a big person. 5% is not less in a listed company. Then please disclose this to the company and to the stock exchange. Okay. If you are holding more than or equal to 5% and now there is a change, either plus or minus, if there is a change of more than 2%, okay, either minus 2% or plus 2%. If there is a change of more than 2%, then also please disclose it to the company and stock exchange that either you have bought more or you have sold. Yes, please disclose it. This is whose responsibility? This is the responsibility of that shareholder, that acquirer and the PAC. This you have to disclose it to the target company also, and you have to disclose it to the stock exchange also where the shares are listed. Okay, now if the target company is listed on IGP, then the percentage will change. Do you recollect in regulation 3 also, instead of 25%, it was changing to 49%. Similarly here, in the first case, instead of 5%, it will change to 10%. And here, instead of 2%, it will change to 5%. Okay, this is in case of IGP. Just remember it once, not really very important. And within how much time are we supposed to go and do this disclosure? Whenever we have acquired or whenever there is any change, then please disclose it within 2 working days. Okay, please disclose it to the target company and please disclose it to the stock exchange where the shares are listed. Okay, but when it is more than or equal to 25%, then you have to give that open offer and all those things will come into picture. If it is more than or equal to 5%, please disclose it once. After that, whenever there is a change of more than 2%, then again go and disclose it to the company. Are you clear with this? Okay, and then going on to the last disclosure, that is disclosure of unencumbered shares. Disclosure of encumbered shares. Encumbered shares are those shares. Encumbered shares are those shares which have some or the other restrictions. Okay, there is a restriction on transferability of shares. That can be because of legal claim by some other person. Maybe you have taken a loan from the bank. Okay, maybe you have taken a loan from the bank and bank has asked for security and you have given these shares as security, right? Or because of pledge, because you have pledged it with any other person, etc. So whenever there are any, if you are holding any shares which are encumbered, then please disclose it. Ma'am, who is required to do this disclosure? Only two types of disclosure. Promoter of the target company. Okay, promoter of the target company would be having some shares with him. If those shares are encumbered by him, okay, please disclose it. To the target company and to the stock exchange that these shares have been encumbered. And whenever these shares are invoked, whenever this encumbrance is invoked, let's say you failed to repay the loan to the bank, so the bank will take those shares, right? Or whenever you repaid the loan to the bank, okay, then the shares will be called as unencumbered shares now. So whenever there is any invocation or release, free, okay, whenever the bank has taken your shares, seized your shares, or whenever the bank has released your shares, please at that time also, whenever you have given any encumbrance or whenever there is any invocation or whenever there is any release, at that time please make sure that you disclose it to the company also as well as to the stock exchange within 7 working days of such event. Whenever you have given it as security, within 7 working days. Whenever they have seized your shares, within 7 working days. Whenever they have released your security, within 7 working days, please disclose it to the target company as well as to the stock exchange, right? And similarly, suppose if your shares are absolutely free, suppose if there is no encumbrance, suppose if your shares are absolutely free, then obviously the above disclosure is not applicable. Okay, then on yearly basis, please give a disclosure to the stock exchange and to the company's audit committee. To the stock exchange and to the company's audit committee that my shares are totally free and there is no encumbrance, and this disclosure is required to be given within 7 days from the end of the financial year. From 7 days of end of every financial year, please give a declaration that, please give a disclosure that there are no encumbrance over my shares and my shares are free to trade. Are you able to understand this? Okay, so these are some general disclosures that were required to be done by the acquirer and the PSE or by the promoters of the target company. Okay, similarly, one more point I would like to add here is even these people, even the left hand side in regulation number 29 also, if acquirer or PSE have any shares which are encumbered, okay, then they are required to do that disclosure also. Okay, whenever they have given any shares or if they have acquired any shares by encumbrance or if there is any shares that they have received during release of any encumbrance, etc., then even they are required to disclose about the encumbered shares. So encumbrance is important because that determines whether the shares are freely transferable or not. So in case of acquirer or PSE and in case of promoters also, both of them are required to do the disclosure. Are you clear with this? Yes. So this was all about your SAST regulations. Most important thing here was the concept. Okay, and another important thing here was when is public announcement mandatory and when is public announcement or public announcement of open offer, when is it voluntary, that we studied in regulation number 3 and 4 combined. And after that it was totally procedural, obligations and disclosure. This you can just one time read before your exams. I hope it was manageable, and roughly in around half an hour we were able to complete this SAST regulations. Yes, do let me know if you have understood this. And again, I'm telling you these notes, okay, these notes relating to SAST, And before, in the earlier lecture, we did about prohibition of insider trading, etc. That is, these handwritten notes are available on my website in free note section. Okay, you can go to arpitatulsyan.com. You will find a tab called as free resources. In that, in the free notes, you will find these notes. Yes, do let me know if you understood. Thank you so much.